Boo boo. No baby.
Sexy bitches, little cowboys.
With the gang, and we out told lab tours. Play with that bell, Uncle Error.
Get caught by them people, don't tell, boy. I got fish skin boots, got me walking on water.
Yeah, the rolling these dollars hit hard. I pull up and shit on their heads.
Them niggas can hate, I'ma get it regardless. Why I hate being this guy, but somebody gotta be him. I been praying for my haters, but I would've wanna be him. Got your girl back on my eat, I'm on the pill. Y'all y'all pull thought she giving out some down the rig. I'ma start some zebra, we can leave it with millimeters. I'ma beat it like Vegeta in the heat, cause I'm a finger. Country boy, sit and walk hard out of leader. Had to cut the dumb bitch out for thinking that I need it. So baby, I'ma catch it. With her mouth wide open, hit the pussy from the back, leave a vertebrae broken. Titties looking like swingers, how them nipples be pole. Breaking bricks with my head while I'm counting up toe swingers on the wheelchair. Got me round low, get the buddy there like Batman. And no, I ain't joking. You don't know it's too late when my chopper has spoken.
Tokenization has come up.
Pump and hop out sweet from hold up. Whole lot of gang members with me. Hey, employee of the month get busy. No, I'm hanging with your whole like T.
Variety of proof of concepts. It allows for instantaneous settlement, 24/7, but it is going to be a platform that runs in parallel to our more traditional exchanges.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Apple is in negotiations to purchase chips from 2 Chinese semiconductor makers on a Pentagon blacklist. The iPhone maker is trying to reduce the impact of a global memory shortage that's forced it to raise prices across its product line. Let's get more details from our China correspondent Min Lo now. So Min, is this going to presumably face some opposition and tension from the US government?
Talk to me, girl.
Hey, Heidi. Yes, I think Apple is trying to prevent that from happening because technically it doesn't require any approval from the U.S. government to buy from these two companies, even though they are on the Pentagon blacklist. It prevents the Department of Defense from buying from those companies, but it doesn't prevent private companies like Apple from doing deals. Now, these two companies in question are Changxin Memory Technology and Yangtze Memory Technology. Yangtze Memory Technology, the situation is a little bit complicated because it's on the Pentagon blacklist and it's also on the Commerce Department entity list. Now, this prevents U.S. companies from selling or transferring their technology to Yangtze Memory Technology. But then again, Apple is the one buying from Yangtze rather than the other way around. So again, they're not going to violate any export control rules here. But again, when it comes to these sensitive technology, the US has been trying to reduce reliance on Chinese supply chain. So it is going to get a lot of scrutiny. And that's why we understand that Tim Cook, the CEO, has been personally appealing to the US government. He has been in talks with Scott Bessent, the Treasury Secretary, and they're hoping to use these chips in phones that will be sold specifically in China in the hopes that it will reduce any backlash from the government.
Who are Apple's current suppliers and how bad is the supply squeeze?
So the current suppliers are the big three, which are Micron, SK Hynix, and Samsung. But the problem with these big three is that they have been cutting the production of DRAM and NAND chips and shifting production to these HBM chips to serve the data centers because that's a much more lucrative market where they can command a higher premium. And we have seen a severe shortage. It's pushed up prices for Apple's products by $100 to $500 a piece. And the supply constraint is expected to continue, right? Because even though SK Hynix and Samsung are looking to expand capacity, it's still going to take some time for those new plants to come online.
Bloomberg correspondent Min Lo there. We have more ahead on the Asia trade. We're live from Kyoto at one of Japan's biggest startup summits as the Takaichi government targets trillions of dollars of investments for AI, chips, and other strategic industries. This is Bloomberg.
All right. What up, y'all? What up, y'all? It's the KRISTOPHER, the KW podcast. This is Christopher speaking. Thank you all, my viewers here. I appreciate your viewership very much, and I look forward to reporting on another day here at Whitney Financial. And last time we talked, I had made some calls. Let's see how they're doing. ETF IQ, that was just showing on there. It's a good one. I'll do a video on that. Futures are looking okay. Today was pretty flat. I mean, it was down a little bit, but here's the last 5 days. So you can see from yesterday to today, it looks like it's still on an upward trajectory. That's how Sherry Han says it, trajectory. And as far as Aussie trade goes, this is a big chart. It's going to take a second to upload here. It usually does. But you see here, each of these are 1 day on a time frame. And so we've had 2 positive days so far, as reflected here. And so this this technical pattern called a cup and handle pattern. Let me just pull one up here so you can see what I'm talking about. Most traders know what this is because it's one of the most basic ones. But it's a pattern that repeats often, and it's usually after a consolidation in the market, like what. Let's just take a quick look here, see what pops up. Just do a general search. I'll show you the chart. I should hurry because the commercial break is almost over on Bloomberg. Come on. All right, that took a while. Cup and handle. So here's your cup and handle. See right here? Now there's all this complicated stuff. Here's the cup, then the handle. Hey, where'd you go? Yeah, let me just right here, this guy right here. Let me keep it simple, you know? It's taking forever. You get the point. So I see the cup and handle. The cup and handle here just moved down. It got pushed down a little bit, but it's still cup and handle. Yeah. So this, you actually know, I can drag it down. The hell with it. Get back here. Oh yeah. Where am I?
I would say these areas.
Finally, oh man.
So a lot of them would be the usual suspects, Korea, Japan.
Internet is slow today.
For sure. Seeing founders from other markets such as Southeast Asia, other areas, and as well as like Asian founders. Entrepreneurs also have larger and more global ambitions than before. At Headline,
gotta move the sizzle
deep
down.
local networks, as well as like the broader global platform. We're super excited to support.
Valuations at the moment, because obviously these areas, these sectors are really hot at the impacting how investors are feeling in terms of sentiment.
Yeah, investors are definitely super bullish right now, but we're also seeing a bifurcation in terms of valuation multiples. People are starting to be more
valuation multiples
and rigorous around the potential AI winners versus not. And then you also see the bifurcation increasing across different segments, and areas like memory chips and others have been surging quite a bit, and versus the SaaS apocalypse from several months earlier this year, you see that kind of sustaining at a lower level. So definitely, I would say people have like strong views in certain areas versus others, for sure.
China has perhaps gotten less attention when it comes to its own AI ecosystem, but do you see lots of opportunities in that market?
In China mainland?
Both onshore and offshore.
Great. Yes, definitely. China and offshore has been a critical anchor for a lot of the physical AI value chain. Across areas such as robotics, deep tech, and different areas in smart manufacturing. For sure, we're seeing more efforts there. And I would say, China onshore and offshore has also taken a more pragmatic approach to AI that is more production-oriented, that's more deeply rooted in the hardware ecosystem advantage.
In terms of the vehicles across Asia, the US, Europe, LATAM as well, how distributed is the focus across each of those opportunity markets?
Yes, great question. On the early stage side at Headline, we have 4 different vehicles across Asia, the US, Europe, and LATAM. And we have local offices across Tokyo, Taipei, San Francisco, 5 offices in Europe, as well as Sao Paulo. On the growth stage side, we have one global fund that essentially sits on top of these early stage funds with leverage, insights, and on-the-ground partnerships around the world to back the most promising entrepreneurs during the scale-up phase. So I would say we keep our eyes wide open in terms of looking for opportunities and entrepreneurs around the world, and we help them with their next phase of international expansion.
You've got a lot of players jostling for fundraising at the moment, obviously, with the massive SpaceX IPO. We've talked a little bit about some of the other AI companies that are headed down that path as well, and even additional rounds of fundraising by the likes of Alphabet, right? Is it getting crowded, and are investors becoming a little bit nervous, particularly in light of the previous rounds of sell-offs that we've seen in these markets?
Yes, I would say, the excitement is backed by people's conviction and enthusiasm around growth prospects of these companies. And it's hard to generalize, but, they all have their strong growth drivers that separately have like their contributing factors. But yeah, I would say people are having more of a consensus view, more concentrated in several concentrated names today than in the past decades. And you see, again, the strong bifurcation between the winners getting ever bigger and versus the smaller, more point solution companies probably getting less attention.
Clary, really great to have you with
Narrow
us.
breath.
Clary, who's a partner at Headline Growth. We'll have more from the IVS 2026 event in Kyoto in the next hour. We'll be speaking with the MUFG Innovation Partners about where they're placing their bets. We'll also be talking data centers with the founder and the CEO of GMI Cloud. Let's get you caught up with some of the other headlines that we're following this hour. And the US won't renew its trade deal with Canada and Mexico, choosing instead to conduct annual reviews of the USMCA Pact. Trade Representative Jamison Greer told Bloomberg that the Trump administration is not prepared to rubber stamp the agreement, which remains in force for another decade. President Trump signed off on the original USMCA in 2020, calling it the best and most important trade deal ever made. President Trump says negotiators have made progress in indirect talks with Iran as both sides try to move past last week's military strikes. Trump's son-in-law, Jared Kushner, and envoy Steve Witkoff were in Qatar this week for discussions on the initial agreement. Vice President J.D. Vance says so-called technical talks are continuing, including on traffic through the Strait of Hormuz. More ahead here in the Asia Trade, this is Bloomberg.
Saw Euro's green there. Well, that was a lot of information. Let's review real fast. Okay, so Apple wants Chinese firms blacklisted. I'm not sure exactly why, though. I didn't catch that. I'm sure it has to do with cybersecurity, probably. Most likely. The lady interviewed was talking about the bifurcation, as she described it, between the winners and losers in the AI sector, and that we're not seeing investors buying the laggards, and that the money is flowing into the winners mostly. So a sign of consolidation in the industry, or a plateau, so to speak, would be rotation from the winners to the laggards. The laggards, they're not necessarily losers, but they have some catching up to do usually, and so we haven't seen that. They call it breadth, BREADTH. So the breadth and the distribution of capital into these different companies has been narrow in these AI tech firms, and so that is a sign that the bullishness is on the continuation.
Back in the previous session, of course, we've seen a lot of volatility for the Kospi, especially since we have chips selling off and they're recouping those losses. In the overnight session on Wall Street, we had another down day when it came to the Philadelphia Semiconductor Index. So you're seeing now the SK Hynix futures falling at the moment. We could see a second session of losses today. Samsung Electronics already at the lowest level since May. Now, still,
we're expecting
we have
that, though.
To keep the broader picture in mind, right? The Kospi is the world's best performing stock index this year. It's being powered by all of these plays right now under pressure. The AI boom that's backed by chip makers such as Samsung and SK Hynix. Now, this leveraged exchange traded fund tied to SK Hynix could be one reason we're seeing so much volatility. It's grown so large and so fast that analysts say it magnifies swings in both the stock itself, but also the broader Kospi. Asia Equities reporter Charlotte Yang joins us now for more on today's Bloomberg Big Take. Charlotte, so, I mean, how did we get to this point where one single stock leveraged product could really impact the broader market structure?
Yes, so I think a big reason why this product has garnered so much attention among traders over the past months is because it has grown so fast and so large. So in about 9 months' time, the CSOP 2x SK Hynix leverage product has grown its assets to $13 billion, and that's the largest of its kind in the world globally. And because the delivery promise to track 2 times the daily performance of SK Hynix shares, the product will have to go into a rebalancing process every afternoon So they have to buy into the rallies and sell into declines. And this is regardless of any views on the fundamentals. It's just mechanical buying and selling to deliver that promise of 2 times SK Hynix performance. And so this product, and together with its smaller peers, what you see is that on volatile days, these mechanical flows can make up 2/3 of the turnover in SK Hynix shares. Consider how big the company is. So I think this is really quite staggering. So I think the core concern market has right now for this product is that this feedback loop, buying into the updates and selling into declines, could exacerbate if we actually see a sharp downturns in SK Hynix. And that kind of decline won't just stay in SK Hynix because it now makes up 28% of KOSPI, and it could quickly filter through the other Asian markets, as we've seen last week when we had that big selling days, and even bleed into the overnight sessions into the U.S.
What kind of stress are we seeing in these financial institutions that keeps this product running?
Yeah, so there is also some pressure showing inside the large machinery that keeps these products running. So CSOP lists over 20 counterparties in supporting the products, and including the major Wall Street firms. So for the banks that offer these equity swap exposure to CSOP, because exposure has gotten so big, they're also facing funding capacity. They're turning away some other hedge fund clients' requests to have these equity exposure, and also charging clients more for it. In other circumstances, they also reaching out to some asset managers that have investing ID in Korea, asking them to buy directly SK Hynix shares and offer the bank swaps instead. So this all shows that there is some balance sheet pressure for the banks. And on the other hand, the banks also need to find ways to hedge their own exposure to SK Hynix, for example. So, for example, the Click case, which is some of the banks that they ask asset managers or reach out to hedge funds for that kind of protection in an extreme down day for SK Hynix. The cost of that has also sharply rose over the past month.
Bloomberg Asia Equities reporter Charlotte Yang there, and subscribers get more on today's big take on the terminal or at Bloomberg.com. Well, Bloomberg Economics says the AI build-out, sky-high equity valuations and a ceasefire in Iran have improved the global economic outlook. As a result, it now sees global growth at 3% in 2026, fourth quarter inflation at 4.5%, but that picture would change if there's a major re-escalation of fighting in the Middle East. For more on that report, let's bring up Bloomberg economist Hyo-Sung Kwong. So the AI boom is a big factor in those forecasts, and one that's, I guess, sits obviously apart from what happens with the war and these peace talks. Are we seeing the economic impact already?
Well, not yet, but probably, that if the AI bubble really collapses, then its impact will be significant, but probably not like 2008 style financial system meltdown, but more like 2000 dot-com bubble bust. So we assumed a 20% correction in U.S. equity prices and a pullback in AI infrastructure in the U.S. and combination of those shocks will push the U.S. economy to the edge of the recession. So our model says that U.S. economy GDP growth will be lower by 1.5 percentage point with a couple of quarters of contraction. Globally, the impact will be 1.3% of global GDP. It is 1.6 trillion US dollars, the size of the Switzerland economy. A drop in investment and weaker consumption would weigh on the economy, but tighter financial conditions through higher credit spread will be more damaging.
In that bear case scenario, would the biggest beneficiaries of the AI boom also be the most vulnerable if we see the bubble pop?
Yeah, definitely. You already pointed out that those beneficiaries like Taiwan and South Korea will be most vulnerable because those two countries are highly embedded in most exposed. Diversified, but Samsung and around 20% of South Korea's GDP this year. So that's a lot. Hit the export and investment and by 4%. 2% of GDP is at risk.
Bloomberg Economics Korea economist Hyo-sung Kwon. Let's also turn to more news.
Taking forever to load. There was one thing I didn't.
A company to compete with industry leaders.
Looks like Trump is deciding against renewing the USMCA deal, and he said it was the greatest deal, and look, now he's not. He doesn't want to renew it. Like, I guess taking a shot at Trump, but at the time it was. But times have changed, y'all. You know. They should mention that, be honest. Let's see, Trump hails Qatar for a meeting on Iran. So it looks like things are working out with the neighbors there. That sounds good. It's bad when they don't have a meeting. SK Hynix, down 6%. SK Hynix down 6%, which is about a third of the Kospi, and Samsung's down about 6%. Kospi's down about 3%, but we were expecting that. In fact, if you look at the very end of my video, it'll bring you to the prior video, and you'll see that we were just talking about that one particular index had gone way too far. So we were expecting some pullback. And that's already expected. That's being priced in right now. The Kospi ETF, I'm trying to Google it here. I've been having some trouble. It may not be a USA listed ETF. But it's this was this ticker symbol I read off the screen. Maybe I need to add 2x to it. Hynix, there you go. That ETF, remember how I was talking about using levered ETFs in the last couple episodes? I think that's a great way for retail style trading, or just even in client portfolios, because you don't have to worry about a margin call with the ETF. Unless you're buying that ETF on margin, but now you're doubling your margin. You're adding margin plus margin. That's more than double. And that's too much leverage, it's too risky. But if you just hold the ETF and let the leverage down inside the ETF, you don't have to worry about margin call. And you're looking at 2 times leverage, 3 times. That's enough. I mean, that's enough without the leverage. A Kospi, as you can see, can move as much as 6% in one day. So Kospi also front runs the markets too. But this time I wouldn't account this for a market front run, because this is more like a over bought market that needs to rebalance basically. And a lot of that flow, they're saying, is because the CSOP, Charlie, Sam, Oscar, Paul, double leveraged ETF that we're looking at here. So they also had the inverse too for it. And let's see, let's look at a 5-day chart on this real quick. It says taking it on the chin. But remember, she's saying it's the best performing year to date. Where are we at year to date? You ain't telling me anything. 800%? Nah. What? Maybe I can't be right. 1 month is 8%. 6 months. No. Wait a minute. Right? Can't be up 800%. Okay, I'm gonna research that on the side here. This thing should be coming back on. That's yeah. So here we go.
Partnership that we will be able to mitigate some of those risks.
We're seeing also more growth of Korean products in the North American market as well. Do you expect to be there?
Yes, we do have a goal to enter the U.S. market. U.S. is obviously one of the most biggest market in a global setting, and I think our goal is to eventually get to the U.S. market, be able to open our stores and to do more business in the U.S. for sure.
What's the timeline?
We don't have a very specific timeline. We're thinking about focusing on China and Japan. That's kind of our first stage. Next would be Southeast Asia, and then maybe perhaps Middle East next year. So the best estimate that I have is probably at least 2 to 3 years from now.
So when do the IPO plans come into place? That's before the openings in the U.S.?
Unfortunately, I cannot discuss the specific time for IPO, but we're obviously IPO is a very important milestone that we're thinking very strategically and making sure that we're preparing for it the right way. But yes, I think it will probably happen hopefully before the entering
very strategically
or expanding globally.
Has the market volatility that we've seen in the Korean market altered or given you second thoughts about your listing at all?
I mean, it's obviously a very attractive market right now, and I think that's why I think we're definitely consider going IPO in Korea. We're also thinking at other markets as well, but obviously currently Korea market is one of the most attractive market. So yes, definitely that's something that we're considering for sure.
I didn't know that you were considering other markets as well. What are some of the criteria that you're evaluating?
Obviously, as a company, wants to go global. We want to make sure that we're being valuated at the fair price, and we believe that U.S. market is obviously one of the best markets to accomplish that. So obviously, U.S. market is definitely something that we're considering. But as you were mentioning earlier, Korean market currently is doing very well. And I think Korea, not just to Mushinsa, but for any company, probably one of the most attractive market to potentially IPO in.
Mushinsa co-CEO Nam Jo there, as we'll be watching the Korea market at the opens as well as here in Japan and Australia headed towards that opening in just a few minutes. This is Bloomberg.
All right, y'all. All right, y'all. We got like 1 minute left before it comes back on. Here's a couple trades I took yesterday. These are old ones, the ones in the red, but the ones in the green, you can see this one, that 69. That's my little. You send a troop out sometimes to test the waters. You send a trooper, a scout. You send a scout, and you see the behavior of the trade sometimes. That was my scout trade. When I saw it was performing, and when I say performing, you want to look at profit in terms of pips, point of interest profits. It's the basis for. If you just Google pips, it'll give you a good definition. That's how you measure your performance. And so it doesn't matter how big the trade is. If you make 10% on $100 or 10% on 1,000, it's still 10%. So the trade doesn't matter, but you need a apples to apples way to measure this to do a comparison. And the way you do that is by establishing a basis, and the basis is pips. So a 60 pip move in one trade is good. You can see here that scout trade's at 48 but it was almost at 100 this morning. And so I added to the trade 10,000 units. It's a pretty good amount here, maybe 1/5, and it's up 24 pips. I expect that to continue on if we remember the chart I had up earlier. All right, let's catch it because it's about to come right on, show the opening right now.
Shaping the C-suite, Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Furniture and home goods retailer Wayfair has long been a heavy hitter in e-commerce.
Sometimes I like to call it Gloomberg instead of Bloomberg, Gloom, Gloomberg, because they bring on a lot of Democrat leaning managers that they interview because Bloomberg obviously hates Trump, so they're always doom and gloom to their own despair, and it's like they think of themselves as being so smart, but then they make these really bad choices when faced with the pressures of conforming to their group, and that's a waste of talent. You're wasting your talent when you do that, Democrats. I'm sorry. No offense or anything. Don't shoot the messenger, because the messenger shoots back. All right, anyway.
We're counting down to Asia's major market opens as we brace for the June payrolls numbers out of the U.S. Of course, Heidi, that will have implications for where the Fed goes from here. But we saw another tech sell-off in the overnight session.
Yeah, and that will really kind of be the big determinant when it comes to the Japan and Korea and Taiwan markets, right? But you mentioned those labour market numbers. That'll feed through to the conversation about inflation after these comments we had from Fed Chair Walsh. Elsewhere, though, we're looking like quite a bit of calm when it comes to at least the geopolitical side of things. Some of the constructive comments on these technical talks leading to a third day of losses for oil, at least, Sherry.
Yeah, President Trump saying that they had some very good meetings in Doha. In the meantime, of course, we're watching those energy-related stocks here in Japan as well. Very dependent on oil imports from the Middle East, but we are seeing those supplies coming back up and normalizing really fast. In the meantime, it's all about the tech story right now. We had in the overnight session, Meta, we understand, is now building a new AI cloud business that could have implications for competitors there. Apple suppliers, we understand, are also thinking of buying from China when it comes to memory chips. So all of those sectors in the Asia session will be on watch today. The Nikkei falling 0.6%. Losses after 3 sessions of gains, a little bit of consolidation. We're already at a 1-month high. The Japanese yen, 162, is the level. We continue to be around the 40-year lows against the U.S. dollar. Of course, we have heard from the chief currency official, Mimura, here in Japan, defending past interventions as effective, also highlighting communications constantly with the U.S., but we're not seeing any let-up when it comes to this weight on the Japanese currency. We're watching also the pressure on JGBs because we do have a 10-year auction today. Do see how the open in South Korea is also unfolding because, of course, when it comes to tech, when it comes to Apple suppliers, memory chips, it's also about South Korea and the Kospi now losing 5%. This is the second session of losses after losses of around 3% in the previous session as well for SK Hynix, and we're seeing now the stock trading at a 1-month low together with Samsung Electronics. The Korean won also weakening against the U.S. dollar. We have data in the last few minutes about inflation also coming through higher than the BOK's 2% inflation target. So that's another thing that this economy, Heidi, needs to contend with.
Yeah, and taking a look at the flip side, of course, when it comes to some of the pressures that we continue to see on currencies like the yen, it really is this dollar dominance, this resurgence back to the greenback, right? And what we're seeing when it comes to treasuries as well.
Remember I said dollar is driving it?
Comments from Kevin Walsh about how he views the inflation picture, which of course is ever-changing, given that we still have a great deal of uncertainty over where the energy crisis is going to settle, but it's certainly making, progress in the right direction. Hence, we heard those comments from Fed Chair Walsh saying that these price risks have come down and that commitment to price stability as well. When it comes to Brent crude, you could see that picture being reflected, a third day of losses being held by oil markets there as we continue to see that steady flow through to through the Strait of Hormuz and these talks continuing as well, the technical talks that go on in the background. The setup for Australia, as we're just a couple of minutes into trade, not so positive. In fact, extending losses for a third session inflation. We finished yesterday at the lowest level in about 3 weeks, and things are falling, particularly given we do have a lot of energy-heavy names in this market. Let's bring Hartmut Issel, who's ahead of APAC Equities and Credit at UBS Wealth Management. Hartmut, great to have you with us. And it's at the time of year where we start looking at what the second half of 2026 might bring, right? Do you expect this really impressive, exuberant level of AI investment and the rally to continue?
Yeah, well, if I start at the top, right, basically the end demand, right? We look at anybody's cloud revenues, whether it's, by the way, hyperscalers in the US or whether it's in China, right? They're all accelerating, right? So am I worried about demand for AI-related services? No, not really that concerned about it at all, actually, right? Because of the acceleration. Then the discussion, of course, that happens is what about within the tech space, right? What about semiconductors versus hyperscalers? Semiconductors is also clear, right? And they had a very, very strong performance. At the same time, nobody's really going to cut their capex either, right? So we have actually in 2 steps recently taken the weight in our selections a bit down for semiconductors, but doesn't mean we're going out of it. In fact, we're slightly overweight still, so that's fine. For the second half, yeah, there may be a bit more rotation, but we'll watch it very carefully. But again, overall, the demand for AI, there's absolutely no sign of any let up.
What are some of the big risks that you see then?
I don't actually see that many risks, right? Because we're looking at every company, especially also outside tech, right? Take our own company, take other financial companies, take healthcare, take travel agencies. Everybody is looking into how they best utilize AI. So that's really not so much the risk in my view, right? What you could see here and there, maybe towards the end of the year, etc. Right? The hyperscalers, they have really ramped up a lot their capex spending, and some investors are worried about it, right? That this flattens a bit out without actually coming down, but flattens a bit out, and then we see, but again, more of a rotation rather than everything coming down. This is how I would look at it for the second half.
Do you worry about the geopolitical risks anymore? Because it looks like certainly crude markets and even policymakers are starting to assume that the inflation woes being created by the energy crisis are now a thing of the past.
Yes, I would agree with that. And it has always been our base case, right? The timing has taken a bit longer than everybody thought, including us. But generally speaking, that it goes this way, right? That the US has a midterm election coming up early November. And of course, you need to see what, on your voters' side, right? what the oil prices or the fuel prices are doing. And also for the Iranian side, right? So high oil prices is one thing. If you cannot ship them out, you're not actually generating revenues that you also need, right? So that ultimately, right? It's not an even path, but that ultimately both sides have an interest to bring this to a settlement, which now seems to be the case, is probably not that surprising. And should, there's also therefore no reason to say, oh, geopolitics, we need to be very risk averse here.
Where do you expect to see the further upside in Asia? You said ex-Japan. China is perhaps, one where there's a bit more opportunity in terms of having less of a rally in the tech space. But where do you see things being spread geographically?
Yeah. Region, yes, you're right. China, especially also the tech side, actually semiconductors, like in the US, right? They have actually also done well. The hyperscalers, the bigger market caps, not so much. That could also be, the shoe could be a bit on the other foot also.
UBS Wealth Management.
Value ups is something that always comes to our minds, to my minds, right? So we have these programs running in Japan. We have them, of course, here in, where I sit, in Singapore.
He does what I do.
And recently, there's also interesting, we had actually a call with the stock exchange representatives from Indonesia, and even they were...
He does what I do, but he's a manager at a corporation, whereas I'm a principal of my own small boutique firm. Still, wealth management is a fancy term for financial
this driver
advisor.
as well, because it helps the stock markets to go up. We're seeing the evidence already.
What about the currency impact? Do you see a meaningful impact for the Japanese markets, for the Korean markets, with the weakness, particularly in the yen?
particularly with the weakness in the yen. Is that going to help other markets? Mr. Izzle. My name is Snoop Dogg. My advisor name is Izzle. I get the jizzle, the shizzle, my nizzle. A fine young grizzle. Okay, I don't know what's taking so long in here. But while this is trying to figure it out, actually I think it's trying to shut down because I have it designed to shut down after 7 automatically because it's a new day. Good morning, y'all. It's Thursday morning. This is the KRISTOPHER KW podcast. KW speaking here, as I was saying earlier. Real quickly, things are opened up green. It's a little bit red on the futures, but that's not much. It's a little bit of consolidation. But just like he said, the AI trade is showing no sign of slowing down. Okay. Now, if we're looking at a fundamental backdrop here that's going to be positive for the market in the near term, there's several indicators that could point in that direction. One, we got ceasefire in Iran. 2, we got the third day consecutively of oil prices going down. 3, we got Trump had a good meeting with Iran, so that's positive news on the ceasefire front, which that counts as the first one I said. So we consolidate those as 2. So we're still on 3. Let's see. Oh, let's not forget, we still got a ton of stimulus sloshing around the system from the big, beautiful bill. So that bill got passed, but the actual funding of it doesn't just all happen at once. It happens over time. And so that money's still getting pumped into the system, providing liquidity for the financial global capital markets. So that's a tailwind that's going to push things up also. So that's number 4. Let's see here. We got dollar strength. That's been a big driver in the yen, but it's starting to plateau. When the dollar's strong, it's hard on the emerging market economies, and especially our China trades. So now the dollar's going to calm down, and the dollar's going to calm down because the hawkishness that we were expecting from the Fed that dynamic has changed. So that would be number 5, and that's because Warsh, the new appointee by Trump for the Fed chair, sees price, says inflation risks come down, and I believe, just my personal opinion, that's by virtue of his appointment alone. But by saying that acts as a dovish comment, and so the markets are going to price in a dovish outcome in the future. Dovishness means that the Federal Reserve has the attitude or belief that inflation is going to come down now, and so the prospect of a rate hike, when rates go up, and it hurts everything, market prices, and it causes slows things down. But when rates come down, it's easy to finance, and so on and so forth. And then this gentleman right here, you got an independent review from a wealth manager, UBS, one of the biggest firms in the world, globally. He was saying that AI flows still accelerating, still overweight overall, and the demand for AI absolutely, quote unquote, shows no sign of letting up. That's pretty bullish to say. And then Heidi was even saying policymakers see inflation, this mostly from oil now, ceasefire, a thing of the past. It's over, y'all, with Iran. Okay? I already said that so many times, but the facts are the facts. Facts, y'all. And then he had a good point about the midterms coming up in early November, and that ultimately both sides have an incentive to bring the oil prices down, because Iran can't ship any oil out right now with the way things are, because the U.S. is blocking them. And oil prices are high, which is the time when they would make the most profit, and so they're getting hurt too. They need their income. Trump is still holding all their funds. He froze all their money, and he's got billions of dollars. So they have no money. They have no income from their shipping. They have no Navy, no military. Their top leaders are gone. And so, I mean, I don't even know why it's a discussion, why they keep acting like they have some sort of power over there. And, Pakistan's played a pretty big role in the talks. And I think they're getting it, They just need to stop the whole Death to America chant, quit funding terrorism, and we'll get off their backs. And of course, no nuclear bomb. Sorry, guys. When someone chants death to America or your country, in any country, if someone just chants death to your country and makes it part of their religion, and this has been a mantra for them for who knows how long, 49 years, I think the Revolutionary Guard's been in power, then they don't deserve to have a nuclear bomb. Because, if they don't have the reserves to not go in and rape and pillage the poor Jewish guys in Israel, they busted in, they did some heinous stuff to them. That's what sparked this whole thing in the first place. They literally, this is a fact, I think I need to watch my language here because of certain words you can't say, but they offed, let's put it that way, they offed little grandkids in front of the grandparents. They threw homosexual people off the roofs. They raped, they armed women, and they just did a bunch of really bad stuff. And I think Israel probably went too far in retaliating, and they kept on getting in the way of our ceasefire. But I think now they chilled out finally, and I think everyone's finally coming together. But the bottom line is, Israel, he did a good job explaining that, because Iran has the incentive to get back to shipping oil, and so our interests are aligned. And if you take out the whole death to America and the whole subjugation of women and hijabs, if that's that thing, I don't know, but they take those tenets out, and conservative Republicans are not that much different than Islamics. I'm just saying, in terms of beliefs, a lot of them align. So y'all might want to think about that, Just cut out the whole Death to America thing. We'd probably get along. Y'all can do whatever y'all want. Okay? So, I don't know. It looks like things are coming together. And y'all are getting it, because we all want peace. No one wants war. And, let's usher in a whole new era of prosperity. We got AI doing amazing things. We don't got time for war, y'all. We got time to fix the national debt, to feed all these hungry people in the globe, to get healthy again, make sure that our food is not full of toxic dyes, and there's just a lot of things that just went wrong since the pandemic, and and there's a ray of hope out there, y'all. I hope y'all see that. If you're watching, mainstream media, they're gonna be you're gonna get bombarded with this negative content, and that's not the real picture. So I hope y'all take this to heart. Anyways, bottom line, buy the dip on AUDJPY. Hold your positions and start adding to them as you see them going up. 1/5 of your overall position. So each trade would be 1/5. And we're looking at T as in Tom, Q, Q, Q. It's 3 Qs. I'm trying to think of Tom, Qubit, 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 Qubit. Tom, Qubit, Qubit, Qubit. Yeah. And then YINN, which is Yankee, India, Nebraska, Nebraska. That's going to be the triple leverage ETF for the Golden Dragon Index for China. That's a good one too. So those are 3 ideas for you. And you can even buy the dip on the Cosby ETF, the one they're talking about on here, which is not a bad idea. Just wait for it to bottom out first. But that one is Charlie, Sam, Oscar, Paul, CSOP. Now, when you're messing with leveraged products, remember that you can lose just as much. Okay, y'all? I got to say that to be fair. But I mean, I just listed 7 fundamental signals that are pretty strong. The risk in the market has gone down, y'all, and the policymakers are reflecting this. So it's time to buy. And so there's blood in the streets, metaphorically speaking, just like Warren Buffett says, that you want to buy when there's blood in the streets because everyone's afraid to buy. But that's the market's already priced in all this risk. So the risk is actually the lowest, considerably speaking, over the near term. All right, y'all. Don't forget to like and subscribe. If I'm never too busy for referrals, please hit that little arrow button to share and copy the link and just send it to your friends, colleagues, friends, whoever you think would find this interesting. And don't forget to, did I say that? Like and subscribe? Yeah, I did. All right. I would encourage you to go down to the alerts and then get an alert on all alerts, because earlier I had posted on my channel an alert to buy Australian dollar Japanese yen, but that was a buy the market in general alert. Because when you're buying Australian dollar Japanese yen, you're buying the market in general. It's just like a proxy of it with a lot more leverage. And so, but also, it's you can use the mark as a proxy as a signal to buy the Australian dollar Japanese yen, and vice versa. But I would expect that one to have a nice rebound. So once again, feel free to leave a comment, y'all. Do you think Warsh was a good choice for the pick, as you know, especially after the Supreme Court made that ruling? Well, the markets are taking it that way. What do you think? Go ahead and leave a comment, and I will see you on the next one. This is KW Podcast. KW signing out.